Moderna's 2025 Q2 financial update. Narrowed losses amid COVID vaccine revenue decline. Moderna's stock is still struggling despite cost-cutting measures, as investors remain skeptical about the future of its COVID vaccine business. On August 1, 2025, the company announced a sharp drop in shares, signaling lingering concerns about its financial health. In a recent update, Moderna revised its annual revenue forecast, now projecting sales between $1.5 billion and $2.2 billion, down from previous estimates. This adjustment comes after the firm slashed $300 million from its budget, primarily by delaying contract revenue into the first quarter of 2026. But here's where it gets controversial. While cost-cutting may seem like a logical move, many argue that the core issue lies in the declining demand for its pandemic-related vaccines. And this is the part most people miss. Shifting revenue timelines doesn't address underlying challenges in the market. Do you think this strategy will work long-term? Or is the real problem deeper than just adjusting numbers? Let us know what you think in the comments below. Moderna earnings report Q2 2025, sales drop, cost-cutting future outlook. In a surprising turn of events, Moderna, the biopharmaceutical giant, has reported a financial performance that defies expectations, despite the waning demand for its COVID-19 vaccine. This is the part most people miss, how a company can still outperform forecasts when its flagship product is seeing reduced sales. Let's dive into the details. Moderna's second quarter sales, announced on Friday, took a hit, falling by 41% to $142 million. However, this figure surpassed analysts' predictions of $112.5 million, showcasing the company's resilience in the face of declining vaccine demand. The company's stock, mRNA, experienced a negative 7.34% decrease, a red down-pointing triangle, reflecting the market's reaction to the earnings report. The biopharmaceutical company reported a loss of $825 million, or $2.13 per share, for the quarter ending June 30th. This is a significant improvement from the previous year's loss of $1.28 billion, or $3.33 per share. Analysts had anticipated a steeper loss of $2.89 per share, according to FactSet. This unexpected performance has raised eyebrows and sparked discussions about Moderna's future strategies. But here's where it gets controversial. Moderna is planning a 10% staff cut as part of its strategy to navigate the changing market dynamics. This move has been met with mixed reactions, with some arguing that it's a necessary step to streamline operations and others questioning the impact on employee morale and company culture. What do you think about Moderna's decision to cut staff? Share your thoughts in the comments below. As Moderna works to expand its offerings and diversify its product portfolio, the company's financial performance and strategic decisions will continue to be closely watched. Will Moderna's efforts to adapt to the post-pandemic landscape pay off? Only time will tell. Moderna stock drops. Cost-cutting measures fail to impress investors. In a move that surprised few, Moderna stock took a hit as the company's efforts to cut costs didn't quite manage to quell investor fears about the future of its COVID vaccine segment. And here's where it gets controversial. Even aggressive cost-saving measures aren't enough to restore confidence when core revenue streams are fading. Recently, Moderna announced a downward revision to its revenue outlook for this year, now estimating sales between $1.5 billion and $2.2 billion. This is a noticeable cut from previous forecasts. The reduction mainly stems from a delay in recognizing some contract revenue, with a shift of about $300 million into the first quarter of 2026. That delay, especially concerning the UK's contract deliveries, has added a new layer of concern among investors who are increasingly questioning the future demand for COVID vaccines in the US. As highlighted by Bloomberg intelligence analyst Sam Fazeli, he warns that Moderna's lowered guidance reflects potential cash flow risks, especially if its promising cancer therapy program with Merck Co. doesn't meet expectations. In pre-market trading Friday morning in New York, Moderna's shares dropped by around 7.7%. This decline underscores the struggles the biotech giant faces as demand for its COVID shot slows. In response, Moderna has been trimming costs, cutting jobs, renegotiating supply deals, and reducing investment in research and production to stabilize finances. Just the day before, it announced a reduction of about 10% of its workforce, aiming to reach break-even profitability by 2028. Although second-quarter earnings showed some signs of resilience, narrower losses than expected, Moderna still posted a net loss of $2.13 per share, a notable improvement from the $3.33 loss per share in the same period last year. CEO Jamie Mock expressed optimism, emphasizing that these moves reflect disciplined financial management. However, the decrease in revenue was stark. Second-quarter sales plummeted to $142 million, reflecting a 41% drop year-over-year, primarily due to waning COVID vaccine sales. Traditionally, the second quarter tends to be quieter for Moderna, as vaccine demand ramps up later in the year in anticipation of fall and winter respiratory illnesses. But this decline is compounded by broader challenges, including the reduced enthusiasm and shifted public perception of vaccines. Adding fuel to the fire, recent political and regulatory developments have further muddled the outlook. The appointment of vaccine critic Robert F. Kennedy Jr. as U.S. Health and Human Services Secretary led to significant policy reversals. Long-standing recommendations for childhood and pregnancy-related COVID vaccinations were scaled back, and Moderna's updated COVID shot received only narrow approval. Additionally, the government canceled its contract to develop bird flu vaccines, which could have been a growth avenue. Meanwhile, Moderna's second major product, an RSV vaccine, has yet to gain significant market traction, further illustrating the hurdles the company faces as it attempts to diversify beyond its COVID franchise. The question remains, can Moderna pivot successfully in a rapidly changing healthcare landscape, or are these headwinds signals of deeper structural shifts? Share your thoughts. Do you see a turnaround on the horizon, or are the cracks widening?